Hey guys, this is Professor Day Trading for Success. I'm about to give you a video that shows you a lot of strategies and talks about the live stream that we just had this morning. So every morning you can see me trading live. It's totally free to jump on board and trade along with the group. So you should check us out at Day Trading for Success 8143 and just put an alert on, and then it'll alert you. You subscribe and put an alert on. And you can trade along if you want. You might learn something, you never know. It's about scalping. So basically our channel is trying to have you make a living. So this is the home page right here. So I have tons of videos that go into lots of detail about trading that you might want to check out, and about how to set up platforms, strategy, historical data. There's a whole bunch of shorts too, although I don't do a lot of those shorts. And then, of course, the live, which is all the live trading I do. So there's tons of those if you want to do that. And then we have playlists too. So stick around. I'm about to break into a really good informative video. I hope you enjoy it, and I hope I see you in the morning, guys. Go green out there.
Welcome to Day Trading for Success. Every morning, join the professor, a former math teacher turned pro trader, and watch him trade live for free, sharing proven strategies, breakthrough indicators, and lessons from essential trading books. The professor is not a licensed financial advisor. Consult a licensed financial advisor before following any demonstrations you see here. Subscribe now and click the notification bell so you never miss a live session.
Hey guys, this is the professor with Day Trading for Success. So I just finished trading my third session with the large cap traders, and I've come back here now to the small share size traders. I should say the large share size traders, and now I'm coming back to the small share size traders to show you how we ended up. I had Charlie, she's my assistant that helps with the chat, and she now has her own funded account that we're trying to keep this month at least $150 to $200 a day. So for those of you that were watching earlier, I did come back on Tesla and made $598. We're going to go over that a little bit, and we're going to go over where I went down with Hood. So we were trading Hood, and I went down 435, and then I came back on Tesla, and then we ended up making our goal, just over our goal. And then I have another trading session to get ready for, so I had to stop with Charlie, and we're going to be dealing with something else. So, but that puts this account in good standing still for every day this month. Here it is now. So we're at $2,000, and we're trying to get to at least $3,000 for the month, and hopefully more. And all we're doing here, guys, is we're showing you a strategy of scalping that can hopefully make a good difference in your life to add to your monthly. And there's a lot of retired people that need, after Social Security or whatever retirement funds they have, they need $1,000 or $2,000 or a little bit more to make their nut, so they're not going backwards and taking money away from their investments. So eventually they have to hope they die or they'll run out of money, what that feeling is. So I understand that feeling very well, and I work with a lot of people earlier on when I used to mentor. I don't mentor anymore, but that had that problem, and it helped me develop strategies and ideas that I went over with other professional traders, like, hey, what can we do? What can we come up with that isn't so happenstance to help them trade to make that money? Now, obviously, trading is risky, and of course, you're always taking a chance. All you can do is get the probabilities that the trade's going to go your way in your favor. You want to have more probability that it can go your way. It doesn't mean it's going to go your way, but but usually means more of the probability would go in your way. Usually it will work out. You just always have to remember certain things, and we'll go over those before we go over the strategy a little bit and the layout a little bit. So that's how we're doing it. I'll keep track of this. Is all reported right from Charles Schwab Thinkorswim right over to my right onto TraderView, and then so this is the actual numbers. So I'll try to show that to you all the time as we move along. So I mean this layout can seem very, very complicated, and you do not need a layout like this to trade. I trade with a lot of different traders. I'm what they call the day trading quarterback. I'm a professional trader, and I call trades. And I use these different tools because different traders trade different ways, and there are different strategies that we set up different ways. What this small account is doing is basically showing people how to scalp and the probability of scalping. So I will have a link to this layout if you want to get it with all of its custom indicators. I do have tons of videos that show you how to build this, that have free layouts on them. It might not be exactly the same, but once you know how to build it, that doesn't matter, right? So you can just build it. And that's what I highly recommend that you do, is you do that. And then I'll have books like Trading in the Zone, Day Trading Volume 1, the Candlestick Pattern Playbook, Best Loser Wins, links to these like really good books that I recommend you read. And the $1 Million Margin Club books is the books that have the strategy guides. So they're really good. And I have a link to that. And then, of course, I have all these custom indicators or coding that I do because I am a coder, and I used to be a math teacher, and I'm a coder as well now still. And I get requests from prop firms that they want special indicators to help train up their people that are making money for them. Prop firm people are making money for them, and that's how they get funded. And so some good traders don't need any indicators, but it doesn't mean that they're not looking at the same price action and volume and historical data. They are. They're just not using an indicator because they're that good. But it's not a bad thing to have the indicators that give you that information that they're gleaning because of their zillions of years of trading and hours at the trade station. You come in new and having an arrow that just says, go that way. You don't necessarily need to know why. It says, go that way, go up, go down, So it just makes it a lot easier to have these indicators. So let's go over a few things. Let's go over the layout first a little bit. So this is a 1 minute. This is the news down here. This is a reduced day chart. And I have a lot of custom indicators on here as well as the social sentiment and then the ATR level. There's lots of videos. This will tell me if I'm I'm holding too much for margin. And then this is a free indicator over at the $1 Million Margin Club. You might want to get this one. This shows, so if you put it on a day chart, which is great, you open up any stock, it's going to tell you what is the average volume over a 10-day period for a 1 minute candle. What is the average volume for 1 day? Average for a 1 day period, and you really want, if you're scalping, you really want it to be between 50,000 to 100,000 per candle. That is a sneeze attack from a cat. Are you all right over here? We have cats in the studio. I'm in a studio where a lot of people trade, and we ended up with people's cats here that they're taken care of. But they're great muses for us, and I'm a cat person. I have my, I don't know if you can see it, but I've got my samurai cat shirt on down here. I don't know. You probably can't see that. But anyway, it was a gift. I like it. But over at the $1 Million Margin Club, there's a link. There's a lot of cool, and that's a very cool indicator to get. But anyway, this can show you right away by looking at the previous data, like is your stock consolidating over a period of days, or has it done a huge move up or down? And you have various time frame charts that are going to tell you that. And it's good to, depending on the strategy, it's good to know that information. These are just reduced charts. Again, you don't need to have these all, guys, but it's kind of cool to have them 5 minute, 30 minute, 1 hour, and 4 hour, because you're setting up strategies based on, on different time frames. So you mark different time frames out. Like if you were to mark a Fibonacci level on a 4 hour, you'd always mark left to right. You left click there, and then you left click up here, 430.36. I'm looking for that price. There it is. And that's going to open up channels. Let's see how that did for us today on the 5 minute. Those are pretty wide channels. I had actually marked Tesla is moving in a really good way off of a catalyst. It's moving a really good way right here. So these two blue lines that I put in price level 1 and 2 are showing you the overall range, right? From 415 to 423, it seems to be keeping pretty steady. So you have to think to yourself, if I'm entering a position, it might move $8 the opposite direction. Like you go in long here, And, it has the capability of moving $8 against you. So think about that. Or if it breaks the channel, but if it's in the channel, then you have a floor and a ceiling. You go long off the floor, you go short off the ceiling. And it basically did it twice perfectly, and now it's right in the middle. With any strategy, what you're trying to do is you're trying to mark a pattern based on recent data. Now, historical data can be 1 minute ago, or it can be like 5 years ago. And then you'd mark, and it's usually data is kept by candlestick patterns that are based on price action. So this 1 minute candle, the price moved that from that high to that low in that 1 minute period. And then that keeps track of it over minutes, hours, and days. And then you can mark those levels. There is a strategy called the RV strategy that shows you how important the levels of the Fibonacci's are as support and resistance. Fibonacci being the oldest possible historical data, that every the tree and plant and everything have the same patterns based on the Fibonacci levels, or the Fibonacci levels based on them, the other way around. So a pattern is just something that repeats, and guess what? Traders repeat. Traders will repeat. So if all the traders are following all the same indicators and all the same historical data, then most likely the price action is going to go, because you're going to be trading with the crowd, and the price is going to go the way of the crowd. Okay, there's a lot of different strategies about that, like 95% of day traders fail. So you're saying, why do I want to trade with the crowd, which is something that Tom Hogarth says in Best Loser Wins. And that's a really good point, right? So there's trading with the crowd for a swing trade, even sometimes day trades, or long-term trades. And maybe you don't want to trade with the crowd. Maybe you need to be that 5% outlier and go a little deeper on your analysis, right? But for short-term trading, really the way the herd moves, and the crowd just move, you kind of want to, if you can see the way the herd moves, you can just move right with that herd short term, and it's very, very effective. And these are short term, these two like aqua blue lines here, very short term strategy levels that you can, check for support and resistance and see, will they be respected? They might be respected. That's an edge. That's a little bit of an edge, right? So I won't go into the entire, an entire strategy, but scalping itself kind of transcends all strategies, because if you're going to go in a 1 minute, 10 second, or 30 second, or 1 minute, or 2 minute, or 3 minute, or 5 minute candle, and you're taking all your trades based on those time frames, right? You really want to have short term data to go by, because you're in and out. So scalping will transcend all those big long strategies, because you're in and out in the middle of them. Now you can look at that support and resistance for bigger moves, right? But in the little moves, it's right in your face. And this is right in your face on a 5 minute. Let's go down to a 1 minute. And now this is a very busy chart. I'll explain a little bit why. All these gray lines are every whole and half dollar. Again, the crowd tends to take trades on even and half dollars. It's really that simple, right? So knowing where those are, like you look at that level, that's 420. See how it just kept tapping and rejecting off that level? Then you come down here, 418, right? Hitting and then going the other way, right? So these whole and half dollars, again, happening right now, live, as we're watching this happen live, right? This is at the 419 again. It's respecting that level again. Right in the middle of the larger historical aqua lines that I drew, there's interior levels that you want to take note of that gives you a better probability going in and out of a trade short term. It's not rocket science. When you trade with the crowd, would you just picture like all these huge cattle in a pen, and somebody jumps up on the fence and it startles the cattle and they all go, they move this way, right? just go that way with them. And then there's something's at the other side, go, no. Sorry, I'm not going to do a cow very well. But it isn't rocket science to trade with the cows, with the crowd. You just got to get in and out quickly, and remember to have a max loss. And I will, First, let me put this on, and I'm not a licensed financial advisor. You should have had that message already, right? So I can make mistakes. Anybody can make mistakes. I'm not licensed to give you advice. I will tell you, if you go speak to a licensed financial advisor, they will tell you never day trade. I've never found one yet that says you should day trade for a new person. It's risky. It's risky. But tons of people make millions of dollars and hundreds of thousands of dollars, and even more people, thousands upon thousands, make a living. You could be that 5% or that 10%, but you have to stick with it. You have to be dogged and read and study and then find a strategy that works for you, because this strategy that I'm showing, which is scalping itself, may not be what you want to do. You may not want to dial in on a chart and do short-term moves like that. That might just be terrifying. You may want to say, I'm going to take this trade for the day and watch it, which is what most traders do, or the week. And you get your information, you do that. Scalping is different, and that's what I'm showing here. That's for a different crowd, and your constitution, your level of stress may not be good for you. Charlie went out and got me a really great coffee. This is my favorite coffee place. I won't say the name of it so you can zero in on my location, but yeah, so it's a stress level thing where now you can see here, like, it's threatening it broke that level, made a new channel, and it's threatening to break this, which is the 50 cent, right? What else would tell us to trade or not take that trade, right? Right now, we kind of want to go long off of its bigger support if it ever gets there, but that might take a while. So now you start to look at patterns. What's the pattern within the pattern? You have the longer term patterns, right? And then you have the short term patterns that make bull flags and bear flags and, tweezer moves. This is a tweezer move here, I mean, there's just tons and tons of patterns. The Candlestick Pattern Playbook, guys, it's the only book that rates them. But I would recommend that you do that. You read about interior patterns. Right now, I don't see a good one to call. You had a Dragonfly, Rickshaw Man, or Doji, these two, which told you about a turnaround, which it did, and then it hit that like a ceiling, that 219, and then rejected. So now you've got an indicator here called the market magnet with these green and red arrows, right? This is the magnet itself showing you overall 50% of the entire volume is in this range, and this is showing you the strongest volume right now, that price range, really 419.50. That's where most of the people are waiting. There's liquidity pools, meaning a lot of people on either side of this, and we can go into deep. Sometime I'll make a whole video about how to pick up on liquidity pool, liquidia. That's not the right word. Anyway, pools of traders waiting to liquidity pools. Thank you. Boy, corrected my own brain there. And I'll do a video at some point about that. But I was about to say this and I forgot. So you should have your own day trading plan. This is a plan I use that I recommend for beginners, except for one line. But let's go over them. Set a goal for the day and stop when you reach it. You should remember that. Don't overtrade. Know your setup before you enter the trade. And that means, like, if you're looking at channels, if you're scalping, how far is the potential of that stock going down based on the data you have? Is your share size the right share size to ride the whole move? So you should know your setup. You should figure out where you think you want to get out based on the data and where it's to cut your loss. I do something a little bit different based on starting as a swing trader. Is I only enter into 25% of my maximum position, and 80 to 90% of all my trades are taken right there. Let's take a look for just a minute at my accuracy. So that's just this month, okay? So today I was 80%, but Friday only 62%. Then I have 80, 93.75, 76, 90, 73, 80, and 90. Now, I used to average, last month I was averaging at 89.9%. I usually average around 90. I'm off a little this month. I'm not having my best month. I think I'm doing a lot of trading sessions, and I tend to The small cap, I take a little bit bigger risks probably, which isn't good since it's for you guys that are beginners. Small share size, I mean, rather than like if I was trading 1,000 or 2,000 shares, I would usually reverse, in a different way. I don't want to get you guys confused, but that 90% or that 80, 60%, whatever, is usually based on me holding and not adding to this. But sometimes I add, like today I did add. I added for Hood and I got toasted. And usually when I add, I will add when the price action's going back up, like it's going against me, and I want to get a better price point. I want to have my shares at a better price. So as it comes back up, I can get out sooner or for more money, right? So I wait for signs that it's going back up on the level 2 or historical data or candlestick patterns, price flow, liquidity, whatever it might be. I see something through my experience that says it's going my direction. Good time to get a better price position and get out quicker or for more money. Well, I did that with Hood twice. I went from 100 shares to 200, from 200 to 400, and then it toasted me for $435 today. So I got out at max loss. I don't know what it's doing now. Probably it's recovered the entire way and I would have made the money. And I stopped swing trading for you guys. I would call that a swing trade, just to hold it. Often I'll just hold that position and wait for it to come back. I stopped that because, basically emails from you guys going like, hey, we can't do that. And why don't you trade more like how we could actually trade? Other people are saying trade exactly how you would trade. Don't worry about the other people. I kind of did a happy medium here where I'm cutting it, but I'm trading a little bit more like I would normally trade, which is a risk factor that's a tad higher than what you should probably do. So again, trade in a simulator for the first time. Trade in a simulator. Get green. Trade very low share size so that your hands aren't shaking and you're not sweating. Be very careful. Build up slowly. Other rules to think about. I just talked about how I might add, and it didn't go well for me, and it could go against you. I said a max loss per trade and a max loss per day. Now, I, again, don't normally do that myself because I have all these tricks to make the trade a winning trade that you guys probably can't do. And I only bring that up because if you watch prior videos, you'll see that I do that I flood the market with shares, or I grab other people to flood the market with shares. That's almost cheating, right? But I can do it. I can do it to make money. After all, in the end, I do want to make money. But I know this strategy will work that I'm showing you without doing that. So I'm trying to stick more true to that. Log every trade and describe why you took it. And that's very important. There's a crap load of log books over at the $1 Million Margin Club. You can just take notes on a piece of paper. I myself like to write it down more than type it. I know there's things you can do it, spreadsheet and all these things you can do. They offer all these programs. I really, from college and high school, when I wrote things down, I remembered better. Also, in a way, slower thinking, but I do think however you do it, you need to log. That's when I first started showing people trading on YouTube. It was all about getting people to log. I still feel so strongly that is the difference between you being a pro and a not pro, making money or not making money. Logging, understanding why you took trades, being critical with yourself, understanding each one, seeing if you got emotionally hijacked, what went down, what went wrong, what went right, even recording them if you can do it, rewatch it, what happened, why did I take that trade, oh my God, what was I thinking? And if you're going to forget, so marking them in the moment is good. And it's okay to slow down and write down when you're scalping, unless you're really at a pivotal spot where you need to take these trades. Like I finally reached my ceiling or floor, and I know I can bounce off that, or my ATR level, or whatever it might be. But I would stop and I would log after every single trade if you're not in that kind of a situation. And think about it, slow down, take a breath, get back in. It's okay. The trades will always be there. They're always going to be there, guys. That FOMO thing's so hard to get over. Trade in a simulator, of course. If you're nervous, lower your share size. I have a whole video about that. Trading with nerves of steel. It's the secret, again, to professional traders. Don't follow anyone else's trades, including mine. I can be there as a guideline. I can lose for you. I can win for you, but in the end, you're on your own. Everybody's on their own. And following, which I know a lot of people do, and a lot of people make money following my trades and other people's trades. And you've got to be prepared for when they're not there, and you're going to be right sometimes when I'm wrong, and whoever you're following is wrong. You're going to see it's like, I don't think he's right. I think he's wrong, or she's right, or she's wrong. I don't think so. Well, I would follow that instinct because I could definitely be off my game, or you could be seeing something that I don't see. The best trader is still out there. We don't know who the best trader in the world is yet because they're not here yet. It could be you, so just keep that in mind. And then don't overtrade to make back your max loss. I'm totally guilty of this. Totally break my own rule, but they're good rules to follow. And don't trade because you're bored. Totally guilty of this. Again, I'm not perfect, guys. This is what I would like to do perfectly, and I get pretty close. But again, do as I say, not as I do, is what I would remember there. But so anyway, you're looking, see what happened? So it stopped down here around the 417. It did a little dip, but now it's created a new channel between this half and whole dollar mark, and constantly telling you, giving you ideas like, you know what, I'm going to go short off this level. Now, when it gets up to this level, you're going to look at things like the Scalp Meter Pro, which actually shows you the buyers and sellers inside the candle. It shows you the percentage. And really, it would have been bad to go short there based on that because it was so strong telling you it was going to go up, right? So that's why you want additional data, right, with your indicators. This is the risk oscillator, which is amazing because it's giving you the range of which way to go. What's stronger? If you go up, you want to go up 32 cents or less and get out, and that's telling you in 1 minute, right, what the average is, and then down. Now, that's not going to tell you which way to go. That's just going to tell you when you get in, when you should probably get out. This is going to tell you which way to go, along with other indicators. See how the volume increased as it was going up? So that's usually a sign that it's stronger and going to continue. Usually, you might be a winner, not always. So, you keep that in mind. Now, all this stuff I'm telling you, whether you believe in what I do or don't do whatever, this is just commonly known facts. Every trader that scalps or day trade knows. There's nobody, I can't believe there's anybody that would disagree with anything I've said right now. So keep that in mind. Whether you like the cut of my jib, the way I look, how I deliver, really has nothing to do with these facts that I'm telling you about. How price volume and liquidity affects how it affects the price. How the MACD, the convergence, divergent as they're getting closer and diverge, how that tells you which way to go. That white arrow, that's what that is, right? And that can be accurate 80% of the time. Can be. Remember, anybody who says do this because this happened, absolutely, then that person's full of it. And don't listen to that person because that person doesn't know. And most likely that person's selling you a course or something else. So, because nobody knows. So you're always, always, always on the edge of your seat trying to find the right probability with trading. And as over time, you get more calm. It's not such an edge of your seat or an upholstered personality, as the cardiologist's office would say. You will get calmer, just like a 1 minute chart seems, oh my God, you have to make a decision in under a minute. It seems redonkulous to most people. I need 5 or 15 minutes. But once you trade here, see how slow this is really going? See how slow these prices are really moving on the level 2? I can make a decision that fast. Does that seem too fast for you to push a button and then to push the button again? If it does, it's because you don't understand the data, that's all. So get familiar with, before you take the trade, well, I'm going to take a trade here because that's a floor and I think it's going to go up. So I'm going to take a trade right there at the 415.50, and it's also at its bottom range. See how at the bottom range over here? So I have something else backing it up. This is going to go long. That's what I'm going to do. It might take a second, but I believe it's going to go long. We're coming up to the 4-hour mark here too. These are telling you what other charts candlesticks are: the 5-minute, 15-minute, 3-hour, 1 hour, and 4 hour, 30-minute, 1 hour, and 4 hour. Other traders only trade on those time increments. So you need to see, what do they see just before they go into a trade? They all see short. You see how that recovered off of that? It's just like, I didn't even have to look. I knew that was going to happen. That doesn't mean it's going to happen for very long. I had a high probability in my mind with a double support, a double floor, nice framework under the floor, that we're going to get somewhat of a rejection, some support here that's going to send this up. Now, maybe that's it, and it's going to break through now. So it's just a short move. So from that move, 1580 up to, you had 70 cents. So $70 with 100 shares. And it's still going, right? So you start to look at other indicators. And they're not all quite as easy as that. That was a pretty easy call right there. And of course, it still might not happen, right? It still might not happen. I know I'm jumping around, guys, but there's detailed videos about all these indicators. And if you go to where you can get them, the $1 Million Margin Call, they actually have a series called the Toolbox series, which breaks into the details about how to read these. I would watch that series. I would watch all of their Toolbox series, because even if you don't get the indicator, they literally teach you by watching those videos how to trade, because it's telling you what other traders are looking for in prop firms and stuff. So go over there and at least check it out. It doesn't cost any money. It costs your time, which is valuable, I know. But they're all like 3 minutes long. And the beginning and the ending repeat because they're like promoting their channel. So just go to the middle, and it's like 2 or 3 minutes long to learn about these indicators. And they're going to cover more data than I do. And it also has the mathematical formula. And you can get that on their site too, the mathematical formula of how these are used. So if you're good at coding, you can code your own, if you want. But they're so wicked cheap, it doesn't even make sense to do that. But I like that they have them, because I've given away a lot for free. Then you guys keep coming back to me if there's a problem or whatever. At least they can deal with anything that's not working for you. So I would go straight to them. They have them for Trader View too. There's I am their brand ambassador for their books and their codes. That's why I talk about them in this way. But also, I would never have been if I didn't believe in what they do. And that's the bottom line. I make a lot of money trading, guys. That is just the facts of the matter. So secondary would be affiliate agreements. And I do have some, and I want to get more for the channel to support itself. But the channel is not and I'm not selling you courses. So you just have to watch. There's 400 videos now. Just watch some of the videos. You'll get what I'm about and what the channel's about. Look at how easy that was to call, guys. Look at how amazing that was. Just amazing to call to make money here now. And, as you get into learning about these levels, it just gets your probability of being successful raises way up, way higher. Okay, guys. So now I'm streaming every single morning for the most part. I'm going to be guest streaming on another channel after this month, and I'll give you the information on where to go. We're still working out the final details there. And then I'll have the recap videos on this channel still. And I might be bopping around to other channels because people are making me offers to come. It helps their channel get, be seen. I was about to say notoriety. It might be bad notoriety depending on how I trade, because when I get off the stream, I'm not always green, but I come back and trade and then show you the recap that, I can come back and be green. My goal is to be green every single day, of course, and I pretty much accomplished that. But there's days like last month I had one bad day. It was like I lost $160 or something. But generally I do pretty good. I'm not trying to toot my own horn. I'm trying to say that I think it's valuable for you to tune in to the streams and get something from them. Something, even on my losing days or winning days, or, what am I talking about when I take these trades? What am I seeing? Why was I wrong or right? And you'll see me get, not sure of myself all the time because I don't know 100%. I don't know. And today, Hood threw me for a loop. I definitely have bad luck with Hood. I've said it before. It's like, I don't know why I keep trading it. I've had good days, but I have bad days, and it annoys the heck out of me. But anyway, I came back with Tesla, which was really moving in and out and giving us moves like that they're so easy to call. But always be prepared, guys. If that broke through, where's your max loss? Where, get ready. Like, hey, it didn't do what I thought. It went the other way. I better just get out for a small loss, and don't always do what the professor does and hangs on and adds to his position because he has ways of, manipulating the system a little bit, which isn't too fair. So every morning you'll see me read the news, read the bias of which way I think the stocks are going to go, the general news about reports about the market, and then I'll break down and mark out all the stocks with that we might trade with historical data levels and Fibonacci levels, and I will make this whole layout's available if you want it on this video here. But guys, and I do have a lot of custom scanners that you might want to look into over at the $1 Million Margin Club that are set to do things like get that average per one candle. So this is showing you all the big ones and what their average is per, it's over 300,000 average on a 1 minute candle. So you're getting a lot of action here, but I have a whole bunch of them that I've done under 50,000, as well as a gap and go scanner that is basically the copy of a popular trader that's selling it to you for a fortune. You can get it free. Thinkorswim does, not free, I think it's $4.99, but I have a whole bunch of them. You can get them at the $1 Million Margin Club, and but you could make your own for free is what I was trying to say. To do that, once you learn how to do this, the capabilities on Thinkorswim, you can do it here. So something to think about for the future. Okay, guys, thanks for watching. I hope I see you in the morning. Okay, you guys go green out there. I'll see you soon.